Hello friends, welcome to my YouTube channel. Today we are going to solve exercise number 2 on partnership final accounts. From the following trial balance of Messrs. Mitesh and Mangesh, you are required to prepare trading and profit and loss account for the year ended 31st March 2019 and balance sheet as on that date. See, Mitesh and Mangesh are two partners in the partnership firm. Trial balance as on 31st March 2019 is given to us. Remember that the amounts of those items which are having adjustments will be written on inner column. Prepare the format of trading account, profit and loss account and balance sheet. Have a look over this trial balance. We may observe that here partners' capital accounts balances are given and partners' current account balances are also given. It means this problem is based on fixed capital method. Identify by the given balances. If current account balances are given, it means that we will have to follow the fixed capital method. As per fixed capital method, the amount of capital remains fixed every year. All the adjustments will carry through current account. So nothing hard is there. Very simple problem it is. Let's solve it. See the trial balance in simple and understanding format. It is given to us. The debit side first. Stock as on 1st April 2018 by rupees 25,000. We will record this stock on debit side of trading account as it is our opening stock. Next, building 48,500. It will be written on asset side. There is the adjustment, so write the amount on inner column. Carriage on debit side of trading account by rupees 1,780. There is the adjustment on it, so write the amount on inner column. Next is factory insurance. On debit side of trading account, we will write this item because it is the insurance of our factory. By rupees 2,700, post it to debit side of trading account. Next, postage. On debit side of profit and loss account, by rupees 1,600, post this item. Next, bills receivable on asset side. Sundry debtors on asset side. Next is return inward 1,600. Return inward means it's our sales return, hence it will be deducted from sales. Next is purchases 68,900. It will be written on debit side of trading account. Then audit fees 1,800. We will write this item on debit side of profit and loss account. There is the adjustment, so write the amount on inner column. Loose tools. It will be written on asset side. Manufacturing expenses, debit side of trading account. Electricity charges, debit side of profit and loss account. General expenses, debit side of profit and loss account. Export duty, debit side of profit and loss account. Cash in hand on asset side. Bank balance on asset side. Conveyance on debit side of profit and loss account. Furniture on asset side. Write the amount on inner column as there is the adjustment. Salaries on debit side of profit and loss account. Rent, rate and taxes. The item will be written on debit side of profit and loss account. Drawings. Mitesh and Mangesh. See, the drawings of partners are given to us in the form of cash. Always we used to deduct the drawings from the capitals of partners. As this problem is based on fixed capital method, we will prepare one separate format for partners current account. Partners current account, this separate format we will prepare. Remember that if the problem is based on fluctuating capital method, we used to deduct the drawings from the capital of partners. Now we will deduct the drawings from current balance of partners. We will deduct means in the partner's current account, we will write the drawings on debit side. Remember that if we are going to deduct something from partner's current balance, we will debit it. If we are going to add something to partner's current balance, we will credit it. Okay, so these drawings will be written on debit side of partner's current account. Two drawings, Mitesh amount 1200 and Mangesh amount 2200. Then see the credit side of trial balance. First is creditors. It will appear on liability side. Next is sales. It will appear on credit side of trading account by rupees 1,75,000 on inner column. In trial balance, written inward is there. That is sales written by rupees 1,600. So deduct 1,600 from 1,75,000. Net amount of sales will be 1,73,400 on outer column. Next, capital balances. Now, the capital balances of partners will be written as it is in our balance sheet. That is, on liability side, write capital Mitesh 1,50,000, Mangesh 50,000 on outer column. As this problem is based on fixed capital method, we cannot change the amount of capital. Next, outstanding salaries. It will appear on liability side by rupees 2,000. Bills payable on liability side. Return outward. It means it's our purchase return. All of you know purchase returns are deducted from purchases. So see on debit side of trading account, we have written 68,900 the amount of purchases. From this amount deduct 1,800. The amount appear on outer column will be 67,100. 67,100 is the net amount of purchases. Then next, current account. Now the current balance of partners, it's given on credit side of trial balance. So we will write this amount on credit side of partners current account as by balance brought down by rupees 3,000 and by rupees 2,000. Okay. Then see the adjustments. First is Mitesh and Mangesh are sharing profits and losses in the ratio of 3:1. Actually, it is not the adjustment, just the information given to us about the profit sharing ratio. Second one, partners are entitled to get commission at 1% each on gross profit. After calculating gross profit, we will consider this adjustment. See third adjustment. The closing stock is valued at rupees 23,700. 23,700 as closing stock will be recorded on credit side of trading account and second effect on asset side. Fourth adjustment. Outstanding expenses. Audit fees rupees 400. Carriage rupees 600. All of you know the effect. Outstanding expenses. See audit fees. On the debit side of profit and loss account, we have written audit fees by rupees 1,800. To that add outstanding rupees 400. On outer column the amount will be 2,200. Its second effect will be written on liabilities side. Similarly, carriage. See on debit side of trading account. To carriage we have written by rupees 1,780. To this amount add 600 rupees as outstanding. On outer column the amount will be 2,380. The second effect will be shown on liabilities side. Then our next adjustment number 5 is building is valued at rupees 46,500. On asset side we wrote building as rupees 48,500. Now the building is valued at rupees 46,500. It means there is the depreciation of rupees 2,000. So deduct the depreciation from the amount of building. 48,500 minus 2,000. On outer column 46,500. and second effect on debit side of profit and loss account. Then next is furniture is depreciated by 5%. See, on asset side the amount of furniture is 64,000. 5% of 64,000 means 3,200. Deduct this amount from furniture. On outer column it will be 60,800 and second effect will be written on debit side of profit and loss account. Now next adjustment is provide interest on partner's capital at 2.5% per annum. See in trial balance, the capital of partner is given to us. Mitesh rupees 1,50,000, Mangesh rupees 50,000. Now we will provide them interest at 2.5% per annum. So calculate the interest. First, Mitesh's interest 1,50,000 into 2.5 divided by 100. This interest will be charged for 12 months as the date of introducing the capital is not given to us. So we will charge the interest for whole year. The amount of interest will be now 3,750. Similarly, calculate the amount of Mangesh. His capital is 50,000 into 2.5 divided by 100. The amount will be now 1,250. Now see the effects. First, the partners are getting the interest on their capital, means it is their income. It is the income of partners. We will record it through partners' current account. Earlier also I said, if we are adding something to the capitals of partners, we will credit that amount to partners' current account. So we are adding the interest to the partners' capital. So write it on credit side of partners' current account by profit and loss account and in bracket interest on capital. In the column of Mitesh 3,750 and Mangesh 1,250. It's the income for them, so we have written it on credit side of partners current account. Now it's the expenditure for our firm. That's why the second effect will be recorded on debit side of profit and loss account under the heading interest on capital. Mitesh 3,750, Mangesh 1,250. Then next, goods of rupees 900 were taken by Mangesh for his personal use. Firstly, it will be recorded on credit side of trading account by goods taken by Mangesh for personal use rupees 900. Second effect, always we used to deduct the drawings from the capitals of partners. As this problem is based on fixed capital method, so the adjustments will be carried through partners current account. Now see, in partners current account, on debit side we will write the drawings of Mangesh as the deduction, as we used to deduct the drawings from partners capital. That's why instead of deducting it, we are writing it on debit side. Amount will be written in the column of Mangesh. Next, write off rupees 1,000 as bad debts and maintain RDD at 3% on sundry debtors. Write off rupees 1,000 as bad debts means these are our new bad debts. See on asset side, we have written sundry debtors as rupees 52,200. From this amount deduct new bad debts 1,000. Remaining amount on inner column will be 51,200. On this amount 51,200, charge 3% RDD. It will be 1,536. The remaining amount of debtors will be now on outer column 49,664. This is what the first effect of this adjustment is. Now second effect on debit side of profit and loss account, write first new bad debts. There is no question of old bad debts and no RDD in trial balance. So write directly on debit side of profit and loss account new bad debts rupees 1,000. In that add new RDD 1,536. Total amount on outer column will be 2,536. Now one adjustment is remaining, that is our second adjustment. We can do the calculation of this adjustment only after doing the only after finding the gross profit. So firstly, let we see our solution. See, this is our trading account. The debit side first. To opening stock 25,000. To purchases 68,900 was the gross amount. From this amount we deducted the returns. By this way, net amount on outer column of purchases is 67,100. Next, factory insurance 2,700. To manufacturing expenses 1,820. Next, to carriage 1,780. Outstanding amount is added to this item and net amount is now 2,380. Next, now see the credit side of trading account. By sales 1,75,000. From this amount we deducted sales return and net amount is written on outer column 1,73,400. Then by goods taken by Mangesh for personal use rupees 900 and by closing stock rupees 23,700. As per our adjustments we have written it. Now do the total of credit side as well as debit side. Compare the sides, write the total whichever is great. That means close the trading account now. The total of credit side is 1,98,000 and total of debit side is 99,000. So the credit side's total we have written it on both the sides. Now deduct the credit side's total from debit side's total. The difference will be our gross profit, that is 99,000. So 99,000 is our gross profit. Now see, in the adjustments, our second adjustment is remaining. Have a look on that adjustment. Read it. Partners are entitled to get commission at 1% each on gross profit. It means that every partner will get 1% commission of gross profit, that is 1% of 99,000. First partner will get 990, second partner will get 990. So its effect. First, partners are getting the commission means it's their income, their balance will get increased. So we will write it on credit side of partners current account as by profit and loss account in bracket commission. Each partner will get 990. Okay, and this commission is the expenditure for the firm. So second effect will appear on debit side of profit and loss account. To commission to partners, Mitesh 990, Mangesh 990. By this way we have completed all the adjustments. Now this is our profit and loss account. See the debit side of profit and loss account first. New bad debts, as per our adjustment we have written. In that we have added new RDD. Total loss on bad debts is 2,536. So this is the loss on bad debts. Next, export duty, electricity charges, postage. Next, to commission to partners. This is what we have calculated now. To commission to partners, Mitesh 990, Mangesh 990. By this way I have written the total of commission which is allowed to partners. Okay. Next, to general expenses 3,400, to conveyance 4,100, to salaries 2,000, to rent, rates and taxes 3,700. Then to audit fees, as per our adjustment we added the outstanding amount and total amount is now 2,200. Then to depreciation on fixed assets, total depreciation for the year is 5,200. Then as per our adjustment we provided interest to partners capital, that is adjustment number 7. See, we have written here interest on partners capital. Mitesh 3,750, Mangesh 1,250. By this way total interest we have provided 5,000. This interest on capital of partners is expenditure for the firm. That's why we have written it on debit side of profit and loss account. Second effect, we wrote it on credit side of partners current account. Then there is no indirect income for the business, hence we only brought forward the gross profit. Now close the profit and loss account. Before closing it, let we have a look on partner's current account. See, this is the partner's current account. Debit side first. These are the drawings which were given to us in trial balance. Instead of deducting it from partner's current account, we have written it on debit side. Okay, remember that if we want to deduct something from partner's current account, we will debit it. If we want to add something to partner's current account, we will credit it to the current account. So drawings are debited here. Then drawings of Mangesh in the form of goods are there in adjustment. So we have debited it to partner's current account. Then see on credit side. In trial balance, partner's current account is given to us on credit side. That's why on credit side we wrote by balance brought down 3000, Mitesh, Mangesh 2000. Then in adjustment number second, commission to partners is there. So we wrote here by profit and loss account in bracket commission 1% of gross profit, that is 992 each partner. Then second, interest on capital we provided. We wrote it on credit side of partner's current account. Why? Because it will increase their income. We are adding something to their current balance. That means we are crediting the amount now. 3750 and 1250. Now close the profit and loss account first. Do the total of both the sides. Obviously credit side's total we will write it on both the sides as it is greater. The total of debit side of profit and loss account is 35,316. Deduct this total from 99,000. The differencing amount is our net profit, that is 63,684. 63,684 is our net profit. We will distribute this net profit to the partners as per profit sharing ratio. It is 3:1. In information number 1, we have been provided with the ratio. So as per this ratio, we will do the distribution. The distribution will be 3/4 into 63,684. That is 47,763 will be given to Mitesh. Then remaining 1/4 share will be given to Mangesh, that is 15,921. So this is what the distribution of net profit which we have made here. Now this net profit, as per fluctuating capital method, what we used to do? We used to add the net profit to the capitals of partners. This is the problem based on fixed capital method. So we will add this net profit not to partners capital but to partners current account. Now if we want to add this amount to partners current account, what we will do? We will write this amount on credit side of partners current account. See, we have written it here by in partners current account on credit side by profit and loss account. Mitesh 47,763, Mangesh 15,921. This is what the distribution of profit we have written it on credit side. Okay, now we can close the partner's current account. Compare both the sides. Obviously credit side is greater, so write the total on both the sides. Deduct the total of credit side from the total of debit sides. Mitesh's credit side's total will be deducted from Mitesh's debit side total. The differencing amount we have written it here 54,303. To that amount we will write to balance carried down. Similarly, the credit side's total of Mangesh will be deducted, the debit side's total of Mangesh will be deducted from credit side's total. The remaining amount is here, that is 17,061. So this amount will be written in balance sheet. Now remember, from partner's current account we will take these amounts to write it in balance sheet. Okay, now see the balance sheet. Here, this is the balance sheet. We wrote partners current balances here 54,303, 17,061, and see here partners fixed amounts are there, that is partners capital is fixed. So this is what our method says. The amounts of partners' capitals remain fixed. All the adjustments are carried through partners' current account. Okay. Then see the other items on liability side. Sundry creditors 38,000. Outstanding salaries 2,000. Bills payable 18,000. Then as per our adjustments, we return outstanding expenses. Then our asset side. Building. From this building we deducted depreciation. 46,500 is the remaining value. Bank balance 29,000. Cash in hand 75,000. Loose tools 32,000. Bills receivable 13,700. Sundry debtors. Now see the adjustment of bad debts. From sundry debtors we deducted new bad debts. We deducted new RDD. Hence the remaining amount of debtors will be now 49,664. Then furniture 64,000. We charged 5% depreciation and remaining amount is 60,800. Last item, closing stock 23,700. By this way, the total of our balance sheet is now 3,30,364. If you have any doubt, you may ask me in comment section. Thank you.